So, borrowing costs are coming down for some Canadians after Bank of Canada did the rate announcement interest cut since March 2025. Up till September 17th, Canada's central bank had kept its policy at 2.75% for last three consecutive meetings, citing ongoing inflation pressures and tariff-induced costs. But now you already heard the news that they have lowered down their interest rate for the first time since March, citing a weaker economy in the face of US tariffs and ongoing uncertainty with loss of basically employment rate going up, loss of jobs. The Bank of Canada governor said a weaker economy, basically, and the current trade war with the latest reports on GDP as well as the unemployment rate rising up above the 7% in the last month meant a reduction in the policy rate was appropriate. So the bank cuts its policy rate by 25 basis points, bringing it to 2.5%. What does it mean? The cut basically was widely anticipated by many different private sector economists after inflation data from Statistics Canada, which showed consumer prices rose by 1.9% in August year over year. And the Canadian economy was also adjusting to the different relationship with their biggest trading partner, which is US. So with a weaker economy and less upside to risk to inflation, the Bank of Canada judged that a reduction in the policy rate was appropriate to better balance the risk of going forward. So today we will discuss what this means for you as an existing home mortgage holder, variable especially, or a prospective new home buyer. It means less interest cost for you. If you have a variable mortgage right now and the interest rate has gone down by 25 basis points, which means 0.25%, that means for every $100,000 that you owe to the bank, you should be now your payment should go down by approximately $13 on average per month. So if you are in an adjustable variable mortgage or line of credit, you will feel that benefit right away. But if you are in a static payment variable mortgage, then you will be paying more money towards the principal as compared to the previous scenarios, because now more money would be going towards the principal. Same thing applies to the clients who are basically going to benefit from the future rate cuts, which most of the economists are predicting two to at least this year. So now the time is to keep it a flexible approach. So it's okay to take a variable rate for the temporary reasons right now, or temporary purpose of seeing where the interest rates land with the future cuts, and then always turn around and request your lender to lock your mortgage and convert into a fixed rate. So variable rate mortgages also have less penalties, lower penalties as compared to fixed rates. That's the other advantage. Even if you have to break it, you just pay 3 months interest penalty and get out of it. So it's a good time to consider a variable rate, but you should be taking guidance from experienced mortgage broker specialists like us, and contact us anytime, and we can run down your scenario and see where we can help you out, what we can suggest. Now, how the housing market will basically react, that's the bigger picture we have to look. So the cut is unlikely to change the affordability overnight, but obviously it could shift the sentiment. So it's going to be basically homeowners who are looking to enter into the market as a catalyst, who are sitting on the sidelines. So 0.25% change does not mean the entire situation will change for a new home buyer, but it certainly sends a positive message that the rates are in the right direction. So what's next? That's another very good question. Bank of Canada is basically now going to take their next rate decision in October 29th. Until the economists and mortgage brokers and realtors will be all closely watching what happens with this rate cut. So keep in mind, whatever happens 6 months ago trickles down slowly and comes to us. So this is the rate announcement, guys. Any other questions, please feel free to contact me or my team. My number is on the screen. We would be happy to help you with all your mortgage questions. Thank you. Bye-bye.